Hello, and welcome back to another edition of Chart of the Month. This is July 2026. We are officially halfway through the year, and boy, what a year it's been. Obviously, we had a crazy start to the year. Quarter one was all over the place with a big sell-off in March. And immediately, we had a record-breaking month in April. Difficulty overseas, oil prices all over the place. A small, tiny little company called SpaceX went IPO and skyrocketed to immediately then now get pulled back to much below IPO price. AI and the hyperscalers are still on the forefront of everyone's minds, and the billions and billions of dollars they are spending on AI and data centers. But with all that being said, here we are in July, and the market has been quite resilient. Overseas markets have done quite well. Not only developed internationally, emerging markets are having a great year also. So, as much as the headlines are built out to rattle us all, the market has been pretty resilient so far in 2026. Today, what I want to talk about is inflation. Inflation is getting a lot of headlines on multiple fronts. One of them being obviously oil prices have been all over the place. We're touching $100 a barrel again right now. We were, almost at 120 a barrel at the peak of the Iran conflict, and we actually saw $80 a barrel quite after that. So oil has been all over the place. Inflation's been somewhat sticky because of that, and with a new Fed president, there's been a lot of talk of what are they going to do to combat inflation. Are they going to end up increasing rates, even though we thought they were going to be cutting rates? And so, what does this all mean for the market? And so, this is a piece from Dimensional that I thought was very telling as far as what does inflation mean for market performance, and will inflation hurt stock returns? And what the data shows us, if we go all the way back to 1996, the green bar being S&P 500 real return. So real return means return after inflation. And then the red bar being those inflation percentages. We can see that investors do not necessarily suffer from elevated inflation. And what ends up happening in the stock market, there tends to not be any correlation with stock market returns. This is very, very easy by looking at just recently 2021 and 2022, right? So 2021, we had almost 20% returns in the S&P 500, but we had a massive spike in inflation. And this is when inflation went up to almost 8%, and the market took it in stride. And then very quickly in 2022, we had inflation came down a little bit, but still way elevated inflation. And then the market sold off quite a bit in 2022. So you can see just in that short period of time, two completely polar opposite effects of inflation in the stock market. 23 of the past 30 years, we've had positive real stock market returns after adjusting for inflation. And again, if you take out inflation or the effects of inflation on your returns, the annualized rate of return after inflation has been about 7.6%. And so this, again, goes to show over the long run, if we look back in history, stocks tend to outperform inflation. And so stocks have been a fantastic, not only creation of wealth, but also a great store of value over the long run. As prices rise, stocks tend to rise over time too, in essentially keeping up with purchasing power. So again, this is a little bit of a shorter one this month, but I know inflation's been in the headlines, and we've taken a couple calls on things like fixed income and staying ahead of inflation. And this chart shows you that there really has not been any correlation between the level of inflation and the returns of the stock market. And so those investors who have stayed in stocks over the long run have been rewarded with great returns, even for factoring in inflation. Hopefully, you found this helpful in putting the inflation conversation in context. Please feel free to reach out to us with any questions, and we look forward to seeing you next month.